And Matt, I was reading a note that you put out yesterday with keen interest. Thanks for coming on. You know, I said the oil market, something looked or smelled sort of broken the other day. Do you feel like the equity markets are also in certain parts at risk?
Well, yes, I do. I mean, one of the things we've seen in a lot of different markets, I mean, we saw it in the repo market last fall in September. Well, that broke down completely. The Fed had to come and bail it out. And you had to wonder, why did that happen? I mean, who was in trouble? Why would the repo market, why would rates in the repo market shoot up like that? And then, of course, we've seen it in the stock market and other credit markets in the last couple of months, and then this week in the oil market. And the thing is, what does it signal on the one hand, but on the other hand, what does it mean going forward? I mean, when you see these huge moves in the marketplace, in any marketplace, especially when you see it in multiple marketplaces, you know that somebody's feeling some serious pain. Somebody's getting hurt. The leverage players on the one hand, and also the deeper it goes and the longer it takes, certain leveraged companies. And that's why you see several ways, difference between a bear market and a correction, as you see more than one wave of selling. And I'm afraid we might see that this time around.
Well, that's what past crises have taught us, that we have a problem over here, and then before you know it, it impacts something over there that you never even thought about. We got about 45 seconds, Matt. What are you most concerned about right now?
Well, I mean, the biggest thing, of course, very quickly, two things. Number one is, of course, the economy and the unemployment rate. Are we going to go back to 3% unemployment like we saw beforehand? Because we have a consumer-driven economy. That's a big problem. The second hand is what's going on in the marketplace, as you mentioned, when you get a breakdown and a wave of selling, forced selling, when it's deeper than just 10 to 15 or 20%. If it ends up being 25, 30%, that causes failures, bankruptcies, et cetera, and it comes down the road in a second or third wave. And remember, let's face it, Bear Stearns had his first problem 6 months before they went under.